If you're tired of constantly losing trades and you're looking for a proven profitable trading strategy that actually works, then this video is for you. This is the exact trade that follows the trading strategy that I'm going to be giving you today. And in this video, I'm going to be breaking this exact trade down step by step. This was also given to my members hours before it played out. But before we break that down, let me walk you step by step through the 4-step trading plan. The first part of this trading plan is very simple. Time of day. This system works between the hours of 2 a.m. and 5 a.m. Eastern Standard Time. Step 2 is all about determining my directional bias. This is the most important part of my trading system. It's the first thing that I do whenever I get to the market in the morning. Essentially, what I want to understand is, should I be looking to go long or should I be looking to go short? And the way that I make that conclusion is by understanding market structure. Are we bullish or are we bearish? So let me show you exactly how I do that. Now, here we are, euro dollar. A couple of days before we get into this position, you can see that euro dollar was in this aggressive bullish trend, right? We're putting in higher highs, higher lows, higher highs, higher lows, and higher highs. Now, eventually this trend had shifted when this low down here that put in the most recent break of structure was broken. That is what we call a change of character. Simply put, there are two characters in the market, bullish and bearish. When we shift from bullish to bearish with a change of character, we've shifted the character. That's as simple as you have to understand it. So now if we just zoom in, once we get that change of character, you can see that price puts in a lower low. Why is it a lower low? Because this low right here is lower than the previous low that we put in price. That makes it a lower low. That makes it a change of character. After that, price pushes up to give us a new high, followed by another new low. That is a break of structure. So at this point in time, it's confirmed that the trend has shifted bearish. This is the perfect opportunity to be looking for short positions. After that, again, we put in another high, another lower low, another lower high, lower low, lower high, and lower low. So in these periods, right, when you get this change of character, you get a pullback, you get a shift like this. If I'm coming to the market and this is happening, I'm looking for short positions. When we get the run again, and then we get a new lower low, same thing again. Whilst we stay above this low, but below this high, I am looking to short. This would have been a perfect short opportunity if it was in my trading window. The same thing happens again the next day. We're going to put in a new lower low and I would be looking to short. Then we put in another lower low and again, I would be looking to short. But on this given day, price shifts to go from bearish to bullish, giving us another change of character in the opposite direction. It's important to keep tabs always on these little swings because this is what's determining our bias on any one given day. So we have our change of character, we put in a high. Now notice, important note here, is that this actually doesn't consider as a swing high because it doesn't follow my golden rule of a 3-candle pullback, which simply means 3 bearish candles should close below each other in succession in order to make it a pullback. So we have not a high, and then price eventually comes in and puts a high in here. So at that point in time, my swing low was down here, and my swing high was up here. Now notice that sometimes you can go from smaller trading ranges to larger trading ranges, and that's fine. You still follow the rules as per usual. Now again, this presents a perfect long opportunity because price is bullish, and in this retracement phase, once we get our confirmation, which I'll share with you later, this was again another perfect long scenario. Then we get the shift of the highs, giving us another break of structure. So a continuation of trend, pretty much. This can be marked out above here as a break of structure. At that point in time, how we then determine our swing high and swing low is simply just look at, if you pull a box from this low down here to this high up here, and then you pull it across, well, anything inside of this high to this low before we break out either side, right? The box method. Either we break out of the box buy side or we break out of the box sell side. In a bullish trend, you would expect that the breakout of the box would be a continuation higher. Well, in this case, that's what we get. And how you can determine your new swing low is simply just look at the lowest point inside the box before the break of structure. So we have a break of structure. This becomes our new swing high. And obviously our swing low becomes this one because it's the lowest point inside of the box. If you have any issues with ever marking out swing lows and swing highs, use that box method. So then we're going to map out our swing low down here to our swing high up in here, right? Swing low to swing high, which now brings me in to present day. That is how I essentially develop my bias. When I'm coming into the market on this given day, so before this trade has even played out, this is what price looks like. So if you're in here, you can see you have a swing low and a swing high. We've had a previous break of structure. Therefore, my bias is bullish. So now I enter my trading session with the understanding that price is bullish, and now I want to look for longs. But here's the key. Just because you understand that price should trade higher because it's bullish doesn't mean that you're going to be a profitable trader. I mean, after all, where do you get in? How do you get in? How do you get out? There are all of these boxes that are left unsolved. So let's go over to step number 3, which is my session liquidation. This is a very, very important part of this system. What I do is I use this indicator here, and what this indicator does is it just boxes the sessions for me. So you can see in here, in the blue box, this represents Asia session, and that is from 8 p.m. until midnight Eastern Standard Time. Then we have my London session, which is my primary trading session, which is 2 a.m. to 5 a.m. Eastern Standard Time. And then I have my New York session, which is 7 a.m. until 10 a.m. New York Eastern Standard Time. So those are my 3 sessions. Now, step 3 being session liquidation. For this specific model, which is one of my A+ setups, I'm looking for a manipulation on Asia. So in London, when price opens, it's very obvious that we see Asia low being right here and Asia high being right here. Now, I'll let you guys in on a little bit of source. Understanding the Asia liquidation model is key. Asia has this common theme where it can be manipulated on both sides many times in the week. You can go and backtest this for yourself. I'm just playing on that, but that in of itself won't give you an edge. You need to align it with things. So here's how we do it. Step number 1, we have our trading window, 2 a.m. to 5 a.m. As you can see right here, 2 a.m. market opens. At this moment in time, it's 2:45 a.m. So we're 45 minutes into my London session. Here, step number 2, we have obvious bullish intention. We are bullish. Our bias is to go long. Step number 3 is to identify sell-side liquidation in my London window of Asia session low. Simply put, I'm waiting before anything. I will not execute on a long position unless that Asia low has been manipulated for this specific model. So what I want to see is this low right here get manipulated. Pretty much just get traded through. Why? Because there are a lot of stop losses below this low that acts as liquidity. So when you see this session liquidity, what you then need to do is pair it with a bullish order block. Now, for those of you who don't already know what a bullish order block is, you want to just look for impulsive moves. For example, we have a very aggressive impulse move from here, and that impulsive move leaves behind this final candle, right, which is more of a like sell to buy candle. So what you'll notice, the common theme is that it manipulates heavily in one direction before reversing and shifting in the other direction. That is intentional manipulation before reversal. Why? Because that price runs low, collects stop losses, which neutralizes smart money to be able to initiate their positions without moving price too heavily. Because for every seller, there must be a buyer, and for every buyer, there must be a seller. So if smart money want to position themselves because they have so much money, they need to create an illusion, the other side of the market, to get involved so they can pair their orders without moving price. That is the concept of a liquidation. So look for those liquidations before the aggressive moves, because that tells you that smart money has an interest in that area because they have intentionally manipulated, and then once that manipulation is over, they've allowed price to go to the direction that they want it to go into. Plus, you're already aligned with understanding that our overall intention is bullish. So piecing these things together, you can start to see how we're getting a good understanding of not only how the market operates, but how we're going to read it in today's market open to get involved in a bullish opportunity. So once I see this here, this Asia session low paired with this old bullish order block created in New York session yesterday, now I have an area of interest, which leads me directly into step number 4, which is LTF confirmation. Simply put, lower time frame confirmation. You see, we're looking at the market right now on the 15-minute time frame. So every time we see these candles, that simply represents a 15-minute block of order flow represented in candle formation. If we want to go deeper and understand what's happening in real time, the lower the time frame, the more accurate representation of what's happening right now we are going to see. Because inside of this 15-minute candle, you don't know all of what happened. You can know some of it, but until you go into the lower time frame and kind of dissect the anatomy of that candle, you won't understand the highs, the lows, the manipulations and whatnot. When we get back inside of this order block, We don't want to just blindly set an order on this area, because if I was to do that, I could set my order and sure, maybe it would work out and I could take my profits up off the high there, and that would be a great trade, 100%. But it doesn't always look that good, because if we go and take a smaller trading range, one that we've seen previously, and we go and take a look at how that order block looks, well, here's what you would see. Same thing, same concept. We're bearish, right? So we're good to be looking for sells. If we were to take this order block, this kind of buy to sell candle right here, and you can kind of stretch it until there's a fair value gap, right? The first and third candle of a move don't meet each other. That would be your supply range or your order block. Now, if you was to take just that trade and you was to put a short position on that level, the risk to reward isn't anywhere near as lucrative as it would be on a lower time frame. That right there would give you a 1 to 3 risk to reward, which isn't bad, but you can maximize that with lower time frame confirmation. And that's what we do. And the second part of that is, the truth is you don't know whether this level is going to hold. So one way to add an extra layer of confirmation is waiting for action inside of this price level to confirm to us that this is a strong level. And I'll show you exactly how to do that in just a moment. So what we want to see is price heading into this manipulation level, into this order block, and then a lower time frame shift. So as price begins to approach my level, I want to drop down to the 1 minute time frame. And I want to do exactly the same thing as I just did before. I want to read the order flow. I want to read the market structure. So as you can see, if we look at the 1 minute time frame, you can see the same thing again, right? We were bullish, we were bullish, we were bullish. We had a break of structure up here. We have a pullback. We had another break of structure. So at this moment in time, the 1 minute time frame is bullish. We have a break of structure, and then the market shifts bearish. We have a change of character. So the 1 minute time frame shifts bearish, which is completely normal, because as the 15 minute comes back, if I show you a visual representation, is the 15 minutes going up like this. As the 15 minute comes back like this, the 1 minute time frame, of course, looks bearish. So what we want to do is we want to use this and wait for a confirmation for the 1 minute time frame to shift back bullish, because this tells us that this level in here that is already bullish is confirmed to be what we thought it was. Why? Because sellers are in control as price goes down, and then buyers regain control of the market, flipping old sellers. This tells us what? That buyers are in control of this price from this level, which is already aligned with what we want. So it gives us an extra level of confluence, which in turn can increase our confidence and therefore lead to a higher risk to reward trade. So as we drop down to the 1 minute time frame, of course, we had bearish shift. We have lower low, lower high, lower low, lower high, lower low, lower high, and now we're in this lower low phase. So price is obviously bearish. Well, now we're inside of our zone. So what I would need to see, you see how price is coming in so aggressively? I wouldn't want to be buying from that movement, because at this moment in time, sellers are very, very aggressive. Now, I also do understand that we are manipulating a level, and that is common tendency for price, because this aggressive seller momentum tricks a lot of the market into believing that we should be going short, which is also part of the liquidity inducement. But as you can see, we are aggressively bearish. I would be a fool to be trying to buy on such bearish momentum, no matter how well I understand the market. What I want to see is a shift in price. So what I need to see is another change of character. Once this 1 minute time frame becomes aligned bullish with the 15 minute time frame, that is go time. I'm simply waiting and avoiding the possibility of taking a loss off this aggressive selling momentum. So if we wait for price, you can see we're having some level of reaction. It's a nice reaction, but as of right now, it hasn't given us any confirmation until this happens. Once this happens and we get this change of character, that is my confirmation. That is my time to act. Why? Because it has proven itself to be a strong area where large money is interested in holding this price, because that's why we have so much bullish momentum. Sellers are in control as price heads its way back down. Once we get into our area that we already had our eyes on, after all of the confluences that we've seen, now we're seeing firsthand the actual order flow shift and so much buying aggressive momentum step into the market, obviously indicating that somebody or some entity is interested in holding this price. And at the end of the day, if you want to win the game of trading, it's not about being smarter than these institutions or these hedge funds. It's about understanding them and then following their footprints. And that's exactly what it is that we're doing. So once we get this change of character, Now everything is confirmed. Let's do a really quick recap. So first things first, directional bias. We are bullish. We've broken structure on the 50-minute time frame. We're bullish, so when I come into this session, I'm obviously looking for longs. Second is my session liquidity. I have my eyes on a major liquidation of Asia low combined with a previous bullish order block. That is pretty much my trade setup. Then the cherry on the top is the lower time frame confirmation to make sure, number one, that this is the level that is going to hold, and number two, that we can increase the risk to reward ratio most times. So if we drop back into the 1 minute time frame, you can see where we are in the grand scheme of things, because this happens to a lot of traders. They get into the 1 minute time frame and they forget what's happening on a larger scale. So don't do that. On the 1 minute time frame, we shift. Now we're looking for entry. What I do, because I don't like entering usually off the 1 minute time frame in large ranges, I'll go to a 5 minute or a 3 minute time frame, and I'll execute my position on one of those order blocks. Now, if you look closely, what you'll see here is that we have the same theme, this aggressive sell that ends up as a buy with momentum on the buy side. That is an order block, right? If we go back to the 50-minute time frame, that is the exact same thing that we see here, this aggressive sell that ends up as a bullish move. That is what we have our eyes on. And then what I can do one thing further is to refine this into the actual wick itself, because that's where the real shift happens, this V-shaped recovery. And that is my entry level. That's exactly where I'm looking to execute price from. I can set my order in here. I can set my stop loss on the low. The reason I can set my stop loss on this low is because if this stop loss gets taken out, if this low gets taken out, that's the trade idea over. I don't need to hold the trade hoping that it turns around. The trade idea is gone. And so if the trade idea no longer exists, then I shouldn't have my money in there anymore. So that is my entry. Now, where does my exit come in play? Now, I have a few different systems on how I manage my positions. One of them being, for this model, is I will hard take profit a large portion of my position, 50% or more, at a 5R multiple. Meaning, if I have a $200,000 account, and I'm risking 1%, so I'm risking $2,000, I'm looking for a 5 times return on my investment. So if I risk $2,000, I'm looking to gain $10,000. That means that I can be wrong more times than I'm right and still make a whole lot of money. That's understanding the art of data. So this would be the trade position. And from there, it's a waiting game. Now, it's imperative that I am executed into this position from step 1, which is 2 a.m. to 5 a.m. EST. If that doesn't happen, there's no trade. So as you can see, price comes aggressively back down, tags us back into our position at exactly 3:30 EST, meaning we're good to go. So this is my entry. My first exit is going to be at this level right in here for a 5 risk reward, where I'll close out 50% or more of my position. And then my second exit point is going to be the swing high. So this is going to be my second exit position. Why this specific level? Because if you go to the 50-minute time frame, we are bullish, therefore we are expecting a bullish continuation, right? When price is bearish, when we're bearish in here, we come back, we take out the old low. We come back, we take out the old low. We come back, we take out the old low. We come back, we take out the old low. The same thing occurs over and over again. Then we shift bullish, we have low to high. We come back, we take out the old high. The expectational order flow is that we come back and take out the old high. That's the whole point of market structure. So those are my 2 targets. First one being at 5 risk to reward. Second one being at the swing high on the M15. And we'll see how this thing plays out. So you can see straight away, we've hit our take profit level inside of New York session. We ranged around a little bit in London, but then we got the aggressive momentum, closed a decent amount of my position at this level. And then price just kind of squanders and wanders around at our take profit level before eventually next day, you can see we have again aggressive pullback. Important psychological note here. This is why I take profits at these 5R levels. Because if you're holding this trade and it runs all the way up to your take profit, but doesn't hit your take profit, and then you watch it return all the way back down, it can be a complete emotional roller coaster. So securing profits, taking money off the table, never makes a trader go broke. It's what locks in your profits, and then you can let the rest of the position run. And if it plays out, great. If it doesn't, no big deal. If you want to speed up your path to becoming a profitable trader and work alongside me on a daily basis and my team of profitable traders, then down below this video, I'll leave a link and you can check it out.